So we will link up the interest expense, which we calculated a while ago from the supporting schedules. We'll link that up to the income statement. And also, we will also bring in here the property, plant and equipment balance we calculated for both the property, plant and equipment schedule and also for the finance leases under the right of use of assets. So we're going to be bringing the total property, plant and equipment balance. As a result of that, here we also have the operating leases, which we will also link from our supporting schedules, which we already calculated. We also have here the long-term lease liabilities, which are the operating lease liabilities and also the finance lease liabilities. We'll be bringing down here the total, the sum of those two. We also have the long-term debt balance, which we calculated a while ago. We just linked that one cell. Remember that we had the total long-term debt. But we just linked that here since we already summarized that a while ago. And also for the cash flow statement, we'll bring in here the depreciation, which we calculated for both the finance leases and the property, plant and equipment. We will bring the depreciation for the right of use of assets and also for the PP&E, and also we also not the financing activity side of things. We will bring in the process and repayments for the long-term debt. We also had that summarized just some few minutes ago. So we also bring that here, and also the principal repayments of finance leases. We also bring that here. We already have all of those in our supporting schedules, and if there will be any proceeds from issuing equity as a result of any capital that will be raised as a result of any funding shortfall, then we will have to bring that up here. So we have all of those already, and pretty much that's what we're going to be doing next. So let us begin linking all of those items. So let us begin with the operating lease expense. So it's going to be equal to, let us go to the supporting schedules under the operating leases. And let's grab the total operating lease expense, which we already summarized here, of approximately $5 billion in the year 2021. So we have that set up there. And we know that we can also fill this right to the end of the projected period. However, we know that the operating lease expense was included in the fulfillment cost, so we will have to make sure that we are deducting the operating expense. So we have to deduct the operating lease expense so that we are not double counting, just as we did for the historic operating lease expense and the fulfillment cost. So we can hold Shift Control, hit the right arrow, and we fill that right with Control R. So we have that set up in place. So we have this set up here. So what next we want to do is to determine the interest income. So the interest income is going to be based on, we take the interest rate, which we already defined in our control panel. We multiply that by Amazon's opening cash balance for that period. So we go to the cash flow statement and we grab the opening cash balance of roughly $42 billion. So we know that Amazon is earning income on its bank account and savings made on its bank account. So we have that setup in place there. And then for the interest expense, let us go to our supporting schedules and we grab the interest expense we calculated a while ago. So we grab the total interest expense under the finance lease liabilities. And we have to add we have to add that interest expense. So we go to the debt schedule and we also grab the total interest expense we calculated a while ago. So right here, so we have the interest expense also on the long-term debt. So we have that in place. We can sum those two and we can make sure that it's